All right, Levi, I'm making you the host, okay?
Hello?
Levi, I've just made you the host, okay?
Okay, thank you.
I actually want some water in case of emergency. 12 to 3 cups, please, and have them put by the window in case we need to.
Hello? Bergström. Okay, no problem.
Mm-hmm.
Mm-hmm. Yeah, okay, sure. Bye. Mazda. I'm gonna start in just one moment. Good evening and good afternoon, everyone. Happy Lag B'Omer. I am operating under the assumption that most of you have already successfully downloaded and were able to install the software from QuickBooks 2020 accountant version with the licenses that were issued. I'm just going to take a quick moment just to show you again the website and the download, and we're going to move straight into the program. I'm sharing the screen here. Okay, we're going to post this. Okay, so I just posted on the Q&A where there's answered. I posted again the link where you could copy it and you would paste it into your browser. And I'm going to share the screen. For everyone who probably did this last time, I'm just going to show it one more time quickly for those who might not have downloaded the Prepper software. We pasted this into our browser over here, the downloads products. Make sure it's the last link that I posted on the Q&A. It's the same one that was sent out the last time by Rabbi Wordy. We're selecting the country of United States. The product we're selecting is QuickBooks Desktop Accountant, not Pro, not Premier. We're choosing the accountant. I will mention that the agent from Intuit who developed the program told me that really the license will enable the functions of no matter which software you download, but I'm not taking a chance on that. So I'm pointing out to take down the QuickBooks Desktop Accountant, and the version we went with the latest one is Accountant 2020. And when you search, it's going to bring you up the screen where you download it. It would usually put it into the downloads folder. Sometimes you would find it in your Windows Explorer. Or sometimes it'll be minimized, like right over here on the bottom of your screen, QuickBooks, and you would just double click on this and the installation would run by itself. It does take some time to run the installation. Many operating systems also makes you reboot the computer because there's some registry codes that are installed in the startup process. So it's possible that the installation wasn't completely done unless you rebooted the computer. That might depend on the type of Windows you had. Assuming that this software is being installed, and when you're going to run the software, I'm going to show you an example of second here. You would get some type of screen asking permission to deal with the computer, and you would press OK. I think the installation window doesn't share installation windows. Actually, here we go. You would get such a shield. Actually, this happens with a different version of QuickBooks, but this is the idea. If this is already installed, would click next, would take out the contents, and would ask you to put in the license code and the product code. I would hope that everything from here is self-explanatory, and we're going to move on to the program. And for those that have a question, please just follow along the program today, and you can request a recording from last time or from how to you review the recording from this class if there's any steps that you could not follow. And because we're going to be in the program, if you don't have the program open, it might be a little more difficult to follow. So I'll recommend taking a review with the class, at least for the first steps. So now we're going to start a company. let's say we have a company, we opened up the software for the first time. Like I mentioned last time, if you have one company file, by default, when you log into the QuickBooks, it's going to bring up that company file. You might have it passworded, and then it'll prompt you for the password. You might decide that you don't want the last file you were in, and you have several files. You want to choose a different file. So we're going to go through all these processes. You're going to see how they work. We're starting right now with the Express Start, and you can always make changes later. And let's take any random business name. I happened to use the name last time, Zoom Consulting, so we just use it again. And industry, ask you to choose, help me choose. And you can pick anything over here that you want. I believe we took information, technology, software, that might be one. And we had over here the income accounts. If you remember last time, we saw consulting, income, hardware, software, support, and maintenance. So if I would click, these are the default accounts that it would show. This would also give you a hint if this is the right file that you would need. In other words, if you were a real estate office, they have actually for rental, you can have income accounts where you get rental income, and you might have to advertise to get tenants or classified. You might have automobile expenses, bank accounts. Computer and internet is pretty standard by everyone. Depreciation, we said we're going to talk about another time. Dues and subscriptions. You might have certain magazines that is necessary for the business. They're going to subscribe to that have a fee, and you want to obviously make it a business expense. So you won't have to pay tax on that money because we spent, let's say if you have $300 of dues and subscriptions, so you will have had $300 less income to in your business. And obviously you might have insurance on your building, you have interest expense, whether it's you have a mortgage, and you're gonna get the document that tells you how much money is for principal, how much is for interest. You might have a private loan. Sometimes you have, obviously consumer debt is not deductible, but again, this is not a tax class. I'm just mentioning the types of accounts. Meals and entertainments, we just explained last time that meals and entertainment should be broken up as two separate entries, because when you bring the report, if you're just gonna give a printout of a report to your accountant at the end of the year, he's gonna ask you how much is the meals and how much is the entertainment. You might give him a copy of your QuickBooks file and he'll look at it, but if he's charging you by the time, obviously his time is more valuable. So you would want to get those numbers in their correct category. If office supplies, like professional fees, this could be any type of fee for professional, whether it's a lawyer, whether it's an accountant. We're going to discuss each of these accounts later, but the idea on the left side is you're choosing a certain type of industry you're going to be in, and these are the default accounts. And it goes without saying, and I'll show you, I showed you last time, I'll show you again. This is always customizable, but this is the Express setup. You could have actually gone from scratch and have 0 accounts, but why have to sit and manually create 20 accounts or even 30 accounts in another business if it's going to be all there for you by default. And a person who has separate entities, you might have separate company file. Of course you have separate company files, a separate company file for each business. You might have a construction company. You could have, this will be a religious organization, that will be if you're the nonprofit, or, and where you show over here, they show you over here that you have, okay, well, not benevolence offerings, that's not really for us, but we have building funds, we have pledges, etc., tithes, if people are giving, you have youth groups. And again, obviously you would customize this however you would want. So we took an example of was information, because that's really what it is. It's about understanding how to use technology. And we just took this as an example. Now, what type of company this is, it's going to drop down. This, you have to decide, well, if this is your own company, if you're setting up a business for the office you're working in, you would have to ask the owner, what type of company is this? There are choices here of sole proprietorship. Sole proprietorship is when a regular person decides, it might be a person unincorporated business. He wants to have a mom and pop shop, a grocery store, a fruit store, or any other type of business. It could be a taxi service, any type of business producing. And he does not get a W-2 for that. That's not how he pays himself. How does he pay himself? At the end of the year, or different times throughout the year, he'll withdraw money from the company. But the way you would categorize this is you have all the income, you have all the expenses of the company, and all these things would appear on the Schedule C of his tax return. That's a sole proprietorship. This person does not have any legal protection. So if he has a house and he has a business and someone has a problem with the business, they could go after his house. That is actually why people create LLCs, which you have down here. LLCs is a limited liability company, and you're only liable to the extent of the value in the LLC. You cannot carry a claim from the LLC over to the personal. Now, there are single member LLCs and there are multi-member LLCs. And I'll show the difference. Single member LLC is called a disregarded entity. Even disregarded means, from a legal standpoint, you have the protection. It's a limited liability company. But from a tax perspective, you do not file a separate tax return. This will all go onto your schedule form 1040. This is Schedule C that we spoke about before. So the sole proprietorship and the single member LLC, as far as the tax return, will be identical. All the income and expenses will go on the Schedule C of the tax return. But the difference is that the LLC has limited protection. It has, why wouldn't the person make an LLC to get that protection? I really do not know. There are obviously certain laws regarding to LLC, certain publishing and filings, which they could obviously consult your accountant or lawyer or whoever you're going to use to set up LLC. There are many companies online. But I'm just showing you that I'm walking you through the steps of setting up a company from scratch. Many times you walk into a company, it's already an existing file, and you're just taking over. But you might, in addition to the job of your company, have your own little business going on the side, and you want to keep your books. So we are trying to give a wholesome education over here. Then you have corporation. This is a company, and this on the LLC, which is multi-members. That does not go on the LLC. The company itself files not a tax, it's a tax return, but it's more like an information return. There are no taxes usually paid when filing an LLC. The profits and or losses, hopefully the profits, are then given as a K1. There's a forms. If it's 2 members, then there are two K1s. If there's 3 members, there are many K1s, and it's all based on how much partnership, how much percentage is the ownership. You could have 50-50, you could have 4 people at 25% each. You could have 1 person 95% and 5%. It's really whatever you negotiate and whether it's in capital invested or work done or whatever it is. So why does QuickBooks want to know that? Because QuickBooks also has the option of preparing your tax forms. And you have to tell QuickBooks when you set up the file what type of file this is. Corporations, they file them 1120, that's its own tax return. S corps are similar to the LLCs from a tax standpoint. It means if it's a single member LLC, all the income would go over, you will take it as a K1 as a single member. If it's a multi-member S corp, it would come over with K1s as if it was a multi-member LLC. And then there are nonprofits. So we decided to choose, for simplification purposes, we have a corporation. Corporations are identified by typing in incorporated, Inc., or corporation. That will be the legal name. Zoom Consulting Corporation or Incorporated. Whether or not these could be 2 separate companies, one Zoom Consulting Incorporated and Zoom Consulting Incorporated is beyond the scope of this course. And here, as we showed you last time, you can also put in your EIN number, you can put in a phone number. All the information which you showed by my company when we're in the file, if you put it here, it'll already be there. One second. Hello? Thank you for bringing it to my attention. It says corrected. One second. So, you see it now? Okay, one second. Resume share. 1 second. Okay. Oh, 1 second. Okay, I'm sorry. Evidently the screen share was not there. So give me 1 second. Exit this. That's why. Share screen. So there's a technical issue here. We're trying to get the screen to work. Channel time. I want to do a video. So right now I'm getting a message that my screen sharing is paused while in the middle of a share, so I'm trying to try this one more time. The top risk is a pause button. Let's see what. Let's see where's a pause button. I don't see a pause button, but no share. Because I don't see a pause button here. Let's resume share.
Meetings.
By missing the bottom, I have a pause.
Let me see what happens. I can share my screen. I want to share my screen. I want them to see me.
I believe the share is recording. Was it? Let's see here. This notice. Okay. Right now I don't see any things that are as I'm introducing the items. So some of the questions I see them, and they're a little beyond the steps which we're holding right now. So someone asked a question why I put chumash in non-inventory. This is actually this is a little spur of the moment item, but let's say I didn't buy it. If I purchase something and I put it into my inventory, let's say someone had donated me 10 chumashim or just given it to me to sell, and I'm not keeping track of it. Inventory also you keep track. Many times there are times at the end of the year you have to go and take stock. What do you have in inventory? And there are different methods of actually taking account of the value of your inventory. The value of the inventory, there are items that go up and down in price, and how you keep track. If you bought something in January for $10, and when you bought them in March, now they're $8, and you're selling them in June for $9. Is it in the loss because you bought for 10, sold for 9, or maybe the item you bought for 8, you're selling for 9, so it's a profit, and wait for July to sell the item for $10 for $12. So that's a separate tax item, which is not for this course, but this thing called first in, first out. So whatever you bought first, that's what you're selling first, or the last in, first out. The way QuickBooks does it is they just balance the value. So if you bought something for $10 and for $8, and there was the same amount, it's called perpetual inventory. So we just take all the inventory at the cost price, and we take the average. So there'll be 9. So you just sold it for cost price. You didn't lose. You didn't make, but at least you didn't lose. Now this invoice, let's go back a second. We go to Customer Center. We're going to see here we have we have an invoice. We sold $20. Let's see, we had here 10 promotion for $20. What's this $200 invoice? This is I had put in, if you recall, I did opening balance because he must have bought, the past 2 years, they bought 100 chamashim, and I'm not going to sit manually and enter in every 10 times those 10 orders and put it in. So the first thing you create a customer, I put an opening balance, and this actually shows you very good opening balance, $200. If you would also want to understand, based on what we said in debits and credits, if I would do Control Y over this $200, 1 second, I just pressed a button that went here. If I do Control Y, what would have been that entry? Accounts receivables. He owes me $200. That's in any invoice. Any invoice that you make, automatically the debit side goes to the asset. And what do you expect from the customer? Obviously, you want cash, but he didn't give you cash. So the asset that you have is the accounts receivables. Why does he owe it to you? Because he got something which you sold. So that is income. You made a sale. Here it's uncategorized income in this case because, first of all, they don't know. We don't have an account associated with it. We just made an opening balance. Compare that to the $20 invoice, which I made. What would be the debit and credit line? Accounts receivables is $20, and book sales is $20. So so the sales price is 2. The debit is always on the left compared to the credit. We did that many times. The debit of 10 books at $2 a piece is $20 asset, and it's a $20 book sale. Now, you can ask me, why am I spending so much time with the debits and credits? And I'm showing you what's going on because, frankly, only invoices to a customer, you create an invoice as account receivables and goes to book sales as automatic. I bought something for a vendor, so then it will be the reverse. Instead of accounts receivables, it will be accounts payable, and it wouldn't be a debit, it would be a credit. That would be the liability I owe. So I would have, instead of book sales as a credit and account receivables as a debit, I would have book purchase as an expense, and I would have account payable as a credit. So all these things hit your cash account or your accounts receivables. Any other entry, as we'll see, maybe later in the class, or definitely tomorrow, we'll show you. I mean, not tomorrow, next class on Wednesday. You're going to use the journal entry. How would you record anything other than an invoice or sale? If someone, company make journal entries. If someone gave the company $500, what would you do with it? You're not creating. You could theoretically you could go the long way trying to create a vendor. You didn't buy anything from me. You say I bought a loan for $500 and then you're creating a bill for yourself. And now you have accounts payable $500 and and to the vendor, that wouldn't really make sense. But what you would do is you would go to General Journal and you would see, you would put in, if they give you cash, you would do either cash, or in this case it's Chase, because your cash goes to the bank. You put in your bank $500, you give you a $500 check, and now you have either accounts payable, or you're going to have accounts payable is usually when you enter the bill. You can have a loan payable. And loan payable, we're going to create now because it wasn't here yet. And I'm setting a loan payable. This is actually another current liability. Okay, it's not a receivable. It's not an asset. When you borrow something from someone, it's considered a liability. So again, to differentiate, usually accounts payable is you enter the invoice, and you can go to invoices and pay invoices. Otherwise, a loan would be a liability. So we chose, if you would create a new account, it's not income expense, it's not a bank. You could put a loan here, it's fine. Track the principal of your business owes for a loan or line of credit. You could have done it as a loan, or you could put it as a other current liability. Either way, you have your account, the account name is loan payable. And as you saw, the moment I put in the Chase $500, QuickBooks automatically made $500 on the other side credit, because everything has to balance. The difference is it doesn't know what the name is yet. It might have been a loan payable $500. It might have been only $250. But you know what happens? QuickBooks automatically is going to add another $250 because you have to balance it out. And that's what it doesn't, that's the beauty of QuickBooks. It doesn't let you make a mistake. If you want a manual entry and you put an expense, you wouldn't know what happened on the other side. And here, you say it's not a loan payable. Maybe this is the company himself. So let's say this is equity. I'm putting my own money. So this is a combined, this is the opening balance equity. I started this business. I put $500 in the bank. How did I get the $500 to put in the bank? Part of it is loan payable, $250, and part of it is the opening balance equity, which I combined, I gave $250. Now we have $500 entry. You have also here the option of a name, because who do you owe the loan to? So you can have the name Rabbi Shimon as a customer, and we know accounts pay. Let's see. Let's account new. I'm going to have in this case, you could call him a vendor, but I didn't enter a bill that way. I'm just going to put a name. His name is Plain Shimon to differentiate him from Rabbi Shimon. This is a businessman, gave me $250, and who's the owner's equity? We said this is Reuven because he's a company, he's the owner, and I'm going to click at him, and he's not a vendor, he's not a customer, he's an other, because it's me myself. And then I close it. If I would now so now we have two things we could look at today, what we learned today. And in general, I'm going to prepare for next class. You'll have objectives that we're going to cover in the class. I'm also going to give you things that a recap of what we did in this class, the main points. So we first of all, we created customer option by Yechai. We made an invoice of $20. We had an opening balance carried over from a manual system entry of $200. So total sales from this one customer should be $220. We learned last time there's a difference of cash basis and accrual basis. I'm just going to discuss it today in passing so you'll understand. How much money did I make this year? This year, it's possible I made nothing. It's possible I made 220. What does it depend on? So it depends on an accrual basis. We said an accrual basis, you earn the money the moment you provide the service or goods. Rabbi Shimon Bar Yochai got those 200 books. He already, the 100 books of the past, another 110 books. We earned $220. That is our profit for the year. And believe it or not, we have zero expenses, if you can understand that. If I put the cash toggle on it, I have zero income. And the reason is because I did not receive any money. So this is a little bit of a review from last time also. The difference between a cash and accrual. Cash, you only count the income as you get the real money. If you didn't get the money, you didn't make money. Accrual is you get the income as you provide the goods. We provided those commission. And the flip side would be with purchases, the same thing. If you only got a bill from a vendor, so then an accrual basis, you would have the expense would show down over here. But if it's in the cash basis, you would have zero profit and zero expense. And why does the money that I owe the person not show up over here? We borrowed $250. Isn't it an expense? And the answer is no, it's not an expense. It's a loan. If someone lends you money, it's not an expense. You borrowed it. You don't want to pay taxes on the money he lent you, right? So you didn't take the income. The same thing as when you are paying back the money, it's not an expense. So the loans and expenses don't even show up at all on the profit and loss. Profit is for sales, cash or credit sales. Expenses are for purchases, cash or accrual. Where would I see any effect in the business on things that I borrowed? And with this, I'm going to go over to some questions. There's a different report, not company financial profit and loss. I might have gone to that very fast before. If you get a report and you scroll down to company and financial, you could get, there's two sections, all difference of profits and losses and balance sheet. So in the profit and loss section, which I did before, was the first report. If I go down to the balance sheet and I want to see the balance sheet as of today, you would see the bank has it $500. I have $220, it's an asset. I have money I'm trying to collect, and that wouldn't make a difference if it's cash basis. Say, okay, so this cash would not count. It doesn't make a difference. And in some cases, you would see, I don't want to get into that right now. Sometimes you go to cash, you will see a line item for accounts receivables. If you don't show the profit account receivables, it doesn't usually show up on the balance sheet. So the cash, I only have $500 in the bank. I have $250 loan payable, $250 owner's equity opening up. And if you recall, and this brings a full circle, we explained that assets equals liability and owner's equity. The assets are $500. Liabilities and owner's equity total will always be $500. There are many variations liabilities and owner's equity could have been. You could have had $100 and $400. You could have $400 and $100, but always $500. The assets will equal the liabilities and owner's equity. You could think of the company as a holding company, which holds the loans that people lent to the company, the equity that someone put into the company. And at the end of the day, when the person who lent this money says, give me back my $250, and when the owner says, you know what, I'm tired of this, I want my $250 back, liabilities and equity is going to be zero. And you know what's going to happen to assets? It's also going to be zero. You're going to take the $250 out of the $500, you'll give it to the liability, pay off your first liability. So you took the $500, is reduced now to $250, and then you're going to take the second $250 and you take it home. So liabilities and owner's equity cancels out assets. It's a counterpart. And this explains whenever you put a debit in an asset, it would result, if the entry affects liability and equity, it would be automatically a credit. You credit, if you debit an asset, over here, if you credit an asset, you're debiting a liability and equity. If you're debiting an asset, you're crediting a liability and equity. But it's possible that you have debits and credits within assets itself, and that I'm going to get to another time. Let me first go through some questions and answers. Which account I put for the invoice? I explained how the invoices automatically It depends how you categorize the item. Also, if you went into to a list and you go to item list, you have Chamashim. We decided Chamashim is book sales. That is the account. If I had a new item, if I had to, and we'll create a new item as we speak, so you understand, if I have an item list, and we say go to item, create a new item, and since Rabbi Shimon Yochai came out of the cave after 12, 13 years, he has no idea what goes on in Elam Hazeh. Obviously, he does miracles. He could fix things that his son, destroys. But if he wanted to give a shear, he wouldn't know, how to over the computer. Someone would have to come and set it up for him, and all he would do would be walk over to sit down by the microphone and start talking. As it comes to a shear. So someone had a service, we'll call it setup, and we're charging $50 for shear setup. And this is the new item. What account is it? So this is not going to be sales of hardware. It's not going to be software. It probably could be, you could classify it as support and maintenance perhaps. And then close this one. There's a spell check. If I would go Control-I, I told you the fastest way in QuickBooks is to go with shortcut keys. And I would put now setup, actually 1 hour of setup or 1 unit of setup, however you call it. Invalid character, yeah. I put in a 1 and I put a dot. Okay, 1 setup. What's going to happen? Because I put in the price, it already knows what it is. Here, you're not going to see the account. If I close it, customer field, you got to bill a customer. Who's the customer building? Oh, Rabbi Shimon Yochai. So we have the $50. Okay, let him ignore it always because he has to learn what a share is. Okay, so we have a $50 item. If I'll go now to the invoice, the profit and loss actually, you would see here now we have $20 in book sales, $50 support and maintenance, and $200 uncategorized income. That, I believe, answers that question. Let me go down to the list. Changing customers info. You would go to a customer center and you have this customer. There's an edit button over here. You edit the button, press the edit button, and it'll bring you, you could go into him. Maybe I only want to give Rabbi Shimon Yochai, credit limit of $250 because, he's on the ground for a long time. For 10 years, I didn't see any money. He just came up, he's restarting the cheder, I'll give him another $200, but that's it. I wanted to pay him up. That's cannot, okay, QuickBooks, that's, gotta do this another time. Why was 500 put in Chase as a debit? We explained ad nauseum that assets are increased by a debit, and the $500 went into Chase account. Now, what would have happened if you gave me the money and it did not go directly into the bank account? There's a thing called a petty fund account where it's not actually the bank. I have a cash drawer. We explained that you have in the supermarket, there's money in the bank. There's in the registers, you have to keep track, the registers have to have money in the cash drawer to give change. So you want to keep track of that. You might want to have every register has an opening balance. You start the day with $200 of change. Perhaps different denominations you'll have in each cash drawer. But in addition to the register, you also have something in the office in case, a delivery comes in and you have to, tip someone or whatever it is. You want to have access to cash. You're not pulling out the register because then there'll be a separate thing which we'll learn is, over and shortfall. What happens when the register shows more sales than the money that's in the register? Was it just an error and too much change was given? Do you have someone who's unreliable and has a hand in the till? So you got to keep track of every type of cash. So, and then there's also undeposited funds where you put in the safe until you make it to the bank. You close the store at night and you want to go 9 a.m. and deposit the money. So there's undeposited funds. Someone doesn't understand the loan liability that's put in today. I just gave an example that we started a company and we don't want to run on dry. And the way the entry ended up was that Reuven, who's the owner of Zoom Consulting, he had $250 of his own, but his filing fees was $400, so he needed to have a little extra. He went to Shimon, who gave him $250. That's a liability, and that's why we have the $500 in the bank, and only $250 loan liability, $250 as the owner's equity. And someone asked, how do you handle retainers that you receive, which you draw against when you provide professional service? This is a very good question. And it also depends, some people take money up front. This, if this is unearned revenue, or it's a contract that the person can't, you're going to provide a service, the person is not really going to back out. So he prepaid you for the first hour or two of service, but you could really count the money for the first 2 hours because you had a consultation, and even though it didn't take the second hour, you told them there's a 2-hour minimum, so we will apply it to credit to the next meeting. You don't come back, you lost your deposit. So you have to first verify, is the retainer only something like it's you're becoming his bank where he's keeping money by you, or that retainer is you're going to draw against. And you will create an account called you can have there's a mirror image. You can have if you had a professional business, you would have consulting. You would go create a list and line item. You would have create an item. You have a new item, and you would put in if you're charging $250 an hour, and he gave you $500. He has 2 hours credit, and when you send him an invoice for 1 hour, it's going to wipe out the first hour. We'll deal with the technicalities of how to show that in the next class. How do you make debit and credit to balance? I'm not exactly sure what the question is from Mr. Schreiber. If you could elaborate a little more on that one. If someone is donating money to the company, which account would it go to? So again, there's no invoice, correct? That is why we need the journal entry. Journal entry could be used very, very frequently. If there was a pledge involved, I would create invoice. He owes the money, whether it's a product or if I scroll down and we showed that this is we had last time, professional service, standard pledge. That's it. So I have a pledge and I'll put in we have their, let's say, setup. Someone pledged to help the organization. They're going to give 2 hours of time. Actually, I'll take the class out. So that's another thing. An amount. So I could change this. If he's giving me 2 hours of time, we said anywhere in QuickBooks there's a calculator. I forgot how much is 2 times 50. So I'm going to put calculator times 2. And I have $100 pledge. That's going to reflect the balance at the bottom, $100. That's regarding the pledge. What happens if he walked in and he actually donated? Again, there are many ways to do things in QuickBooks. If it was cash, I could go through banking. I would use the bank register. And I would just enter a deposit. Today, again, if you recall, what happens if I walked into, I'll give you also the shortcuts that we learned so far. Let's say you came to your company and it showed 510. Quick way, you press the T and it'll bring you to today. That's today's date. Usually the numbers are assigned over here to journal entries or to checks. Depending if it's a deposit, you don't have to spend time and wipe it out. You could just go, after you have the deposit, automatically it's going to take away the deposit number. So if I put in $100, you see automatically it records deposit and takes out the number. You might want to have a number deposit anyway, then you could go back and put in deposit because if you keep track of your deposit slips. Now, we don't have yet an account for this. So one way to do it is this. Again, you'll see, you'll have the merits of one way or the other. I could have purchases. It's not an expense, it's a type of income. If I would have, I'll create new, and I'll just put in donation. Or I could put in donation. I could put in donation, you can have charitable contribution. And it depends on whose end it is. If you got a kind if you got the donation, then it becomes your what's that account name for example, donation will be here. It's an expense. I could put it in as income. So my income, go to account type and donation. And this is how people give me donations. I'll record that. If I was giving donation, it will be an expense and the name will be donation. If you're your own company, you probably wouldn't be receiving donations and giving donation at the same time. It will be you receive a donation and you give out disbursements to people or stipends. If you're a company, I'm not sure you really call it donation, you call it some type of other entry, which we'll discuss. But if you assuming that you're asking this question on a non-profit, that's how it'll be. You have income, you would have, and it's called donations, and that would be for that. And another way to record that is you would go now. If I got another, I would go make general journal entries, and I would. By the way, if you notice, it's interesting. Even though I did deposit it directly in the bank. Okay, so here the $100 is donation. The $500 that we did last time as a journal is a general journal entry. I create a new general journal entry, and I'm going to put in another donation. So if I'm receiving it, and I tell you you could do debits and credit out of order, I received $50. Automatically, QuickBooks, when I go on to the next line, is going to put me a debit. What is the debit? The debit is, I put in my bank. Again, assets go up with credits. So here you have Chase. Chase got a debit $50 and donations. In this case, the deposit comes through as a general journal entry. If you put the deposit in directly, it shows a deposit in the bank. Control Y will give me the debit of $100 and the income, $100 to Chase, $100 to donations, but the type came in as a deposit. If I put that in as a general journal entry, the debit will be the same, will be Chase. The credit will be the same, will be a donation, but the type came through a general journal entry. This is how you would track transactions that come in as journal entries, that come in as deposits. You'll be able to know. These are two ways how you can record the same donation, directly in the bank or with a journal entry. Let me move on to some other questions. So if someone's donating money to the company, as it will be a gift, I wish people donated money to my company. It didn't happen yet. Does cash, I guess, or Chase equalize owner's equity? I'm not sure what that question is. Does what equal owner's entity? The bank is the asset. Owner's equity is one part of the equation of the other side. If liabilities are zero, then cash will equal, the Chase will equal owner's equity. Okay, I got a request to slow down on the owner's equity. Ran through those. I'll go through other questions and I'll see if there's still more people asking the same question on owner's equity. I'll spend time with that when I try to categorize an item as selling, no inventory. Again, we didn't set up this company as a, okay, we're not going to be dealing with inventory right now today. I got sidetracked. When I get to merchandising industry company, we'll deal with the inventory. Okay, before I click on a tab or option, can I pause over it because it's hard to keep track? And helping us slowing down that for someone put in the E equals 1 plus O. I'm not sure what that this equation in which language this is. Assets is A, liabilities and owner's equity. Again, profit shows up. Okay, so this is a question. Where the profit comes up on the profit and loss sheet. What happens is at the end of the year, I told you that those are temporary accounts. And I could show this to you on an accrual basis because we don't have any cash income. So let's say so far we're holding this year $420 of net income. $20 book sales, $150 of donations, and $50 of sales. Total income, $420, zero expenses, if you could believe that. If this was the end of the year, next year will be zero. What happens to this 420? Where does it go? Net income gets added to owner's equity. So owner's equity is permanent and it grows with the previous year's net income. So I'm going now to the balance sheet. And you shall see an accrual basis what happened this year. I started off with, we have $650 in Chase. Okay, oh, actually, I should have to go to accrual basis. That's what I told you I'm going to do. You see the net income on the bottom. This is where your profit shows up. So we have $650 in the bank. The $500 that we made with the general entry. We have the donations. Again, I'm going back slowly to the banking so you can see what we put in the bank. If you recall, we have 3 deposits in the bank, and the bank shows a total of $650. We have a $100 donation deposit directly in the bank. We had a $500 deposit, regardless how this was made up from loans, but as far as the company is concerned, this is an asset. And we have $50 of donations. We put that in this general entry type. So the total in the bank, I'm going down slowly to the balance sheet. What is the company worth today if I had to sell it? So we have $650 in the bank, and we have $270 of receivables that we have to collect. What is the total? 270 plus 650 is 920. And since assets always equal liabilities and owner's equity, we know that liability is only 250. Owner's equity is comprised of 2 things. This year and last year, or anything previously. So opening balance equity is, because this is the first year we opened up, is 250. Net income will be 420. What would happen if now we're in 2021? I'm not going to go through it. I'll tell you verbally, and you'll be able to see it if I go back and do an entry. Now the opening balance equity, the opening balance, or they'll call the retained earnings, what the company has, all the money they made after paying liabilities from this year, from last year and the previous years, will be 920. That will be your retained earnings. It's a new name, it's a new concept. This is what the company retained over time. And we'll discuss retained earnings next time. But this year we're adding net income. So again, the profit and loss of the current year, which is $420 in accrual basis, again, because most, if you go on a cash basis, all we have is really 150. So the 420 will become our net income, which gets carried over to our balance sheet, which we'll discuss in more detail in another class. And what would happen if I would go to my profit and loss and press cash? What did I make on a cash basis? Not 420. I have to reduce it by $270, which were the receivables. The only cash I made this year was $150. We will see the same thing in the balance sheet in the report. The balance sheet report in a cash basis. How much is the net income? $150. Again, if it was a little too fast, we'll discuss this a little more. But I'm just showing what happens You shouldn't think net income always disappears when you start income from scratch. Where does it go? It has to go somewhere. It goes into the permanent account of owner's equity. There's always a credit account for a debit account. There's always for every debit there's a corresponding credit. It could be one on one. It could be one on one side and multiple on the other side. I'm not sure what the question is. Can you have another time? So, how do you record a bounce check? Well, if you sold something for $100 and the guy paid you with a check and the check bounced, you lost that money. So if you get the money back and the guy replaces it, so you still have the money. If the person doesn't pay you back, you lost it. So it will be a bad debt expense. You could make an expense for that, or you could apply when you get your bounce check, you can reduce your sales by that amount, or you'll keep the bad expense open. We'll discuss this again also in a future class. How do you actually account for lost income? When you make sales, do you assume that and you make say $10,000 of credit sales? Do you assume that you're going to collect every dollar, or do you have to take into account that maybe some things will be uncollectible, and you record a certain percentage, whether it's based on historical data, 2%, 4%, or whatever you think will be uncollectible, and that will be, you'll have your sales reduced by that amount. That is, for the most part, a tax question, but you should, for accounting purposes, it's something to take into account a number of courses down the road. A second. Cancel. I believe I answered that last. That was done. How do you erase an invoice? We explained last time that if you go to edit, okay, we go very slowly. You have to be in an invoice. So let's assume I'm going back to Rabbi Yochai, and he decided that he's in the era where they're learning Teresh Alapeh. So, okay, the Chumashim are Teresh Alapeh anyway, but he decided that he has left over, I'm giving it back. You could either delete the invoice or you could void the invoice. Many times it pays to void an invoice because invoices have numbers and they're sequential. And like this, you could account for every number. You will know that if a number is, every number either has a sale, if the invoice was canceled, the order was canceled or returned. So if it was returned, you never canceled. You made a sale, you made the money, person returned it, you give them a refund. The sale happened. You cannot change the reality. From an accounting perspective, a tax perspective, at the end of the day, you'll end up with the same amount of money because you made plus $100 and you refunded $100. But you do have the invoice, there's no reason to delete it. If the person made the order on the telephone and before you even had the chance to send something out, to cancel it, that would be the question: do I void it or do I delete it? Once you have a lot of missing numbers deleted, who is to say that someone comes in the office, they could invoice the customer for something, get a payment, and then afterwards delete it, and there'll be no record in the company books. So many people would say just void invoices as opposed to deleting them. Okay. Before I click at anything, I should stop and let you do it as I go, because I'm going too fast. Okay. And noted. Someone asked a question: what's the biggest difference between profit and loss tab and the balance sheet? Profit and loss is all temporary. It's what did I sell this year? and what did and what were my expenses? If you recall, we had a question last time. Someone asked me, isn't income an asset? Right? I sold something. Is it an asset? No, the money that you got goes to the bank. It's an asset. Because as I just showed you, income and expense affect owner's equity. Because after you take the whole profit and loss sheet, how much you sold, how much, and what were your expenses, you take the bottom line, and it could be a positive number, it's a profit. It could be a loss, and it'll be a negative number. That number is your net income or your net loss. And that goes over to where? So we're going to go back to window. We go back to the balance sheet, which I closed. So I'm going to go again. You can follow me. Balance sheet standard. So for those who didn't catch up, I'll give you the transactions pretty much that we did, and you'll be able to enter them. Balance sheet standard. And you see what happened. The net income, where did it end up? It ended up by equity. So assets equals liabilities plus owner's equity. And owner's equity in turn is made up of the opening balance and this year's net income. And if it's not the first year in business, this whole $920, or actually probably the equity will stay there. You always know what you open with $250. The $420 will become retained earnings, and next year's profit will be the new net income. So you see that the profit and the expenses, they all net out in the profit and loss document. Here's profit and loss. Why does here show 150? Because I'm in the cash level. I'm going to try to stick to cash for a while. The reason why I went to accrual is because we just did invoices and I had to go there. But you have here an accrual. We have income 420. That is the profit and loss. And this all affects the owner's equity section in the balance sheet. And these are reports that you have to know how to make. At the end of the day, after putting in all the entries, the bank accounts, the bills, you paid the sales, you paid the vendors, and you're going to make a P&L sheet, which is called short profit and loss. That number in the bottom should be going over, you should see it reflecting on the balance sheet. The assets should equal the owner's equity and the liabilities. And turning sound off. Well, for starters, you go on the bottom ribbon of your computer. I could perhaps share my computer screen. Let's see, new share. Let's see if I have my screen here. Let's see, and hopefully this is gonna work. A second. Stop share. You guys have to stop share. And I'm gonna new share my screen. If you would go down over here at the bottom, and there's speakers. Actually, something else. Here's speaker. Double click on it, and you can just click here, and there's 0. Then your computer doesn't make noise. Some people actually get a thrill of hearing the beep in QuickBooks every time you do an entry. Some people it's an annoyance. I'm assuming that you're hearing my beeps, so I just turned off my sound. Or maybe didn't. I'm going back to the QuickBooks now. Inventory is most definitely an asset. It's when you buy product to sell, it's not an expense. It's called a shift in assets. You converted cash, which is valuable, into an inventory, which is an item you're going to sell, it's valuable. No one's paying you money for something which has no value. They're buying from you something which has value, and the difference in your cost and the sales price, that is the profit. And that's so that's also an automatic relationship between profit and loss and the balance sheet. As you go in a sale, you're pulling out value from your balance sheet and you're taking it as an expense, which we'll see in either next class or I'm not actually, so we'll do inventory in at least 2 more classes for now. The total of this year's equity is net income, is this year's net income and last year's net income. But last year's net income gets a new name. It's called retained earnings. If I buy a copy machine, that will be a debit because I'm buying it. It increases my assets because now I have a copy machine. Is that correct? So the debit is an asset. I have now a machine. I bought a copy machine, so I took $5,000. That is a credit to my cash, and it's a debit to a machine, which is an asset. That's an example where not always a credit in a credit or a debit in an asset affects owners and equity and liability. It's just a shift in assets. You have a debit asset and credit asset. And you could also have in liabilities and owner's equity also debits and credits within itself. Someone asked me, how do you open this page? I'm not sure which page he's referring to. Is he talking about how you put the 500 in Chase? I assume he's talking general journal entry. So I did that a little fast before. So whoever wanted to see how to go general journal, it's under company. So so far we did the first tab of each section. We learned homepage. That's how you go to homepage. We learned in company, my company. That is how you would enter your information over here. You would edit it if you had to change the name of the information, if you want to change the EIN. And I told it what type of, I'm a corporation, so it's smart enough to know it's 1120. And then finally, in the third section, or actually fourth section rather, is make general journal entries. This is how I put money into Chase through an account. I press Chase, CH, and automatically it brings up the Chase. That was one way how I put money as journal entry. Then there was the second way, which I showed you, and I'm going to do this a little slower. Go to banking. In banking, you go to use register. Banking, use register. In this case, we only have one bank. And like I said, I explained to you last time when I showed you the example of ledgers and journals. Theoretically, every account is a ledger. If I were to open up loan payable, it's a ledger. You have a whole section where you could see the activities of this account. Every account is an account in the ledger. But right now I'm going to use register. By default, we're going to the bank. Again, we go to banking. We go down to use register. If I could do a shortcut called Control R, but you would want to pick what type of account you're going to. In this case, it's Chase. And now you have the bank register. That's where we put it in. The other deposit, not the 500 one, because the 500 came in through a general journal. What we did directly in Chase Bank is a deposit of the $100 donation. And you could do the same thing by yourself. You could click over here and you would go, if you wanted to keep track of who gave you the donation, you would enter a name over here. So names do not only go for checks. When you write out a check, it has a name. You can also have over here an opportunity to put in your customer's name of his deposit. So the check, the name for a check corresponds to payment, and a deposit over here on the right side corresponds to payee. Now, This is probably what you're more used to in your bank statement, that you have payments and you have deposits. A payment reduces, and that's what you probably thought, it debits your account. Payment debits your account, it reduces your account. And you put a deposit, it credits your account. But this is only in the bank register, but it's really the opposite. This is to give you familiarity to your checkbook balance sheet for the manual system. But as you see, the deposit, which you would think credits money to your bank statement, is actually a debit to the cash account. As you recall, I deposited money. You used to thinking it on your bank statement as a credit to your account, and I get more money. But really, what it is, if you go Control Y, as far as Chase is concerned, that is a debit to the asset. I think I answered that question. I'm going down the list. If someone's asking if I can make a slideshow on steps to create customers and to create invoices. Probably the steps would be, well, the slideshow is really within the recording, just slow motion. If you would watch the recording, at that juncture, you would press play and you'll see where I go to company, where I go down the journal entries, you'll see it. And I will, Mitzvah Hashem, be going through those steps that drop slower. I realize that most of you are really copying all the transactions that I'm doing, not just watching what I'm doing someone said I did not add a bank account in the beginning. How do I answer one? We could start doing polling, in the session 2 from now, people who want to show their expertise and knowing an answer. So how would you add a bank account? Well, a bank account, we explained, is an asset. All the assets or liabilities or the owner's equities, the income expenses, all these 5 types of accounts are part of the chart of accounts. That's actually why, before we even created the company file, we picked an industry which will shorten the process of creating all the chart of accounts. And if you remember the shortcut is Control A. Control A will give us, if I was in QuickBooks here, will give us a chart of accounts, and you could go to Account and New. So once you are already in the chart of accounts, you go Control N or New. It's going to give you a new account. You can pick bank, and this is if it's your first bank account. I just press Continue. If I did a little too fast, and you can give account name. So Control N would only work if you were already in the chart of accounts. Control N is not the account. Let's try again. If I was Xing everything out, and I'll just do Control N. I just press Control N. You can try it on your computer. It doesn't really get you anywhere, but if you do Control A, and then within the chart of accounts, you do Control N, it will bring you up, making the bank account, and you can see how this is faster in catching your mouse and moving around. Let's move on to the question. Hopefully I'll be able to cover all the Q&As in that section, and if there's any chance, if someone had a specific question that they posted in the chat, please copy it over. Now will be the time to put it over to the Q&A. So we answered this live also as well. Is there a difference between bank register and a bank on the list of accounts? It's one and the same. It's actually a different format. Does anyone remember how much was the bank account? It was $650. If you look up over here at the top, okay, I'm going up to the top. Again, we have the same 650. As a matter of fact, this is the reason why in the report, how does QuickBooks know to show me, and on it's actually in the balance sheet. Again, the assets are the balance sheet. How did they know there's $650 in the account? It's only because the fact is that the account actually has $650. This is the chart of accounts. Because there's $650 in the account, that will show up on your report. If you don't, as I said, if you don't make the deposit, you can't take the withdrawal. How did I know that the 500 was for credit? I'm not sure what the question was. If you put a $500 debit, automatically there has to be a corresponding credit. And they would in the same way, if I had first put the credit in, there would have had to be a corresponding debit. And how do you record processing fee? We'll get to that. Please remind us in the next class. How do we watch the recordings? I believe whoever emailed Rabbi Wordy after the last two sessions, he emailed the link for the recordings. Okay, what's the difference between register and deposit? Deposits are going usually into a bank account, and the bank is also a register. I show you, if I would, even over here, double click on Chase, it would bring me to the bank register. Again, I could have gone to banking and gone to use register, and then it would show me, and I click on Chase, I'm already here, so it wouldn't open another window. If I was already in Control A and I was already in the chart of accounts, I double click. Again, I get to the register. So it's every account runs with a register. There are increases, there are decreases. In the case of a credit card, you will probably see instead of payment, it will show charges, and on this side will be a payment. When we do credit cards next time, we'll do a recap on some of the steps from this time, and we'll show how to do credit card charges, because even service companies have credit card charges. Difference between register and deposit. Retained earnings, again, retained earnings are the cumulative net incomes that the company had. Now, if the owner wanted to take a draw on his profit, right? He made $420 this year. He wanted to make a draw, and he took out $100. So the company still made $420. That's going to show up on the P&L, because you can't just take out money for yourself as an expense. But on the other hand, it's not in the company anymore. It's pulled out. It's not retained. Retained is it's kept in the company. If you withdrew it from the company, so no problem. You're already paying taxes on it because it shows up in your P&L. The 420 would initially be transferred over to your, we'll go over here to the balance sheet again. Initially, by default, your net income would show up over here. But then if you would withdraw from your account $100, there'll be a debit and a credit. You'll be debiting your retained earnings. Retained earnings is owner's equity, and that's a credit. You would debit retained earnings with a debit, and you would have a draw account. The drawing account would go up with a credit. So again, taking out money of your company lowers your retained earnings. Retained earnings is equity, which goes up with a credit. When you withdraw money, it debits your retained earnings, and the credit will be a drawing account, will be owner's draw or something similar. It's a contra. It's a balance to your owner's equity. That's so when it says control and work an invoice page, what would you want to do? You just do control. If you do control I and you do and you made an invoice, you have to save it. So on the bottom of the screen, there is a shortcut. We won't do it right now. There are shortcuts to save, just to save the invoice and close it out, or save invoice and up with a new one, but it's not control N. And so what do we accomplish today? So what we hopefully accomplished today, after we showed everyone how you can set up a new company. You could choose the type of company, the industry, the generic chart of accounts to come along with it, and you could check also the formation of the company, the type of entity the company is. Is it a sole proprietorship? Is it a company which has protection like an LLC? Is it single owner LLC or partner LLC? Is it a corporation or S corp? A lot of those things are mainly for tax purposes, but you would know just to pick one. So quick to help QuickBooks help if you get you your tax forms. Once we got into QuickBooks, we took Rabbi Member Llc, we created him as a customer. He had an open balance before he disappeared for 12 years, but I just put him over here for opening balance this year because we're not entering all those, manual entries. He took another 10 Chumashim credit. We showed him how we do that. We have credit sales. We took donations. So we showed the difference in cash sales. And we go back to, it's open. And by the way, this is one of the, for those who might have liked online, there's a bunch of tabs when you go online QuickBooks. The benefit of the software is you get a bunch of open windows. You can bounce around from one report which is already prepared to the others. I'm going right now back to my profit and loss. We showed how the accrual basis would show me $420 in sales. The cash would only show 150 of the actual income, in this case donations. This company is a business, really shouldn't receive donations, but I just showed it to you to show you how donations come in. We also we explained how to enter money borrowed into the bank, because when we started, we had zero money. We had to pay for some type of expense. We can't run on zero. So initially we borrowed money, $250. We go back to the bank. The bank account we go to Chase. It's called Chase. That's a shortcut. We don't have to look for bank anymore. We know it's Chase. So initially we had put in on 511. We put in the $500. It seems like they are sorting it alphabetically. I believe that I put in the $500 before the donation of 100, but since everything is all on the same day, they put the DEP type before the general. Anyway, we showed how we borrowed. I'll go back into it by Control Y. You'll see the entry. We borrowed $250 as a liability. We invested of our own. So this is Reuven and Shimon over here. We said with two people. Reuven is owner of the company. It's his owner's equity. We have the liability, $250, and we put in to the bank the $500. That's a debit to asset Chase. And hopefully, someone asked me how long does it take to get comfortable. Hopefully by next class already, with all this showing you directly in the entries how it's a debit and a credit, will make it easier for you going to next class. We also showed how the net income transfers over to the balance sheet. So going again, the profit and loss. In this case, now I'm back on the cash view. It's $150. So my balance sheet, I have to have, you can't have a P&L, an accrual, or in cash and having the other one not matching. So again, here my net income is matching as 150. The 650 in the bank is always the same. That's exactly what went in the bank, 650. That's the cash. That's what actually came in. And all the cash that came into the company is also 650. It's a 200 from the loan payable. It's the liability. 250 from my owner's equity, which I initially put in. Not the opening balance of the customer. Don't confuse that. The opening balance for the customer is opening balance for a customer. This is opening balance equity, what the owner put in the beginning, net income. And hopefully if we show next class, I could just make believe, we'll go back to the 2019 year, and I'll put in the transaction from last year for income, and you should see that net income would show up here as retained earnings in between these lines of owner's equity. Let me run through some of the other. Yes, bank feeds can automatically upload transactions. You could pay money to QuickBooks and you can have it within the register itself. We'll show up next time. Or you don't have to pay QuickBooks money. There's no reason. You could log into your bank and download a file of transactions. I believe the maximum thing is somewhere between 1,500 to 3,000 transactions. Otherwise, it's gonna, don't take such a big time period. When I record a payment, when I receive the check, or when I deposit the check, is the payment received or are you paying? What's the question? If it's the customer, so yeah, you have to explain to you last time in the last class. You have, if you have open invoice, don't just deposit the check. Receive the payment. If you go to customers center, when I do again, customer center, slowly. Rabbi Shimon owes us $270. Let's say I'm gonna right click and I'm gonna go down to receive payment. We right click, we receive the payment, and there's a choice of 2 invoices, or actually in this case with 3 open invoices. We have his open balance of $200. We have the $20 purchase and the $50 purchase. This was technical support. Let's say he's going to pay today $200. He says, you know, let's take care of all the past and let's close out the history. We're going to start a new page. Now you'll see I'm true to my word. I didn't disappear for 10 years because I just, when I go for I was really safe for my life. There's no way I could send a check that would track me down. So I'm paying my $200 and I receive the payment and I save and I close. Now he only has $70 left owed. He only owes $70 for the 2 other invoices. If I would go now, window, profit and loss, it tells me refresh needed. Why refresh needed? Because I just did a transaction which changes the thing. If I was in accrual basis, nothing would have changed. But in cash basis now, instead of 150, I would have 350. Lo and behold, what do you know? We have 350 here on my profit. If I go to my balance sheet, I'm going to drop down in my window, back to my balance sheet, I'm going to refresh, and net income line will show again 350. Here we go. I think that was a little fast. How do you delete fake clients so you can start over? Is there a reason to do fake clients? Is Zoom consulting your actual company, or this is a practice file? So by the end of 2 weeks, if you did all the transactions we did, you would have a P&L, you would have a balance sheet which would match similar to the transactions. Hopefully I'll be able to give you a list of the 10 transactions I think or so that we did. You could follow through and make sure that you have all those transactions in. How can you take into account liability owned to the balance spreadsheet? That's what I mean, is the spreadsheet that you report. How can you take, I have to read this again. I need to drop a clarification on the question. I'm not sure what the question is about the taking into account liability. We know that we have to pay the person eventually, the one who loaned us $250, but I'm not sure that's really a question. In the case of Reb Shimon, you made an opening balance 200 as of May 1. Oh, yeah, May 1 of this year. So I was just talking, I was giving some effect to it, but you're right. I'm not going to go back and change this bill to 10 years ago. That's not the idea. The main point of giving an example is how would I have owners, how we retain the earnings. If retained earnings will be in the year, and the accrual, if it was accrual, will be in the year you earned the income, and in cash it will be in the year you made the income. It's just really plugging in the bottom line of that income and into the balance sheet. Again, I hope that we'll be finishing by 10:15. Sorry for in general, I'm trying to say actually to shorten the course by a class or two by making this, I think we're scheduled to go to the end of June. We'll see next class, the calendar exactly. Some people might be going away at the end of June for the summer. If you want to add invoices to earlier dates, would it affect the balance? Obviously, you don't have to create invoices in order. If you have a messy desk and you just want to enter paper after paper, then QuickBooks will sort everything itself by date, by the date of the invoice. Interesting enough, will remind me in the next class, in the bank, you could sort out the transactions by the date of the transaction or by the order entered, just so you could review the last things you put in. If you want to review them, and then you could go back and put them back into the date. Okay, I see someone made on company. That's good. How do you mark as invoice as paid? It's paid automatically if you received the invoice. If someone accidentally just deposited the money in the account, the bank account, and didn't credit the customer, there are ways to do it. We'll learn it also, if not next class, a class after. But the short way is receive the check, receive the payment on the invoice. Automatically, the invoice will be marked as paid, and I'll show that to you. And then the money still has to be deposited in the account because you only have it as undeposited funds. And I'll show you right now. If I go to banking, slow banking, make deposits, I should have $200 that I got today from Member Llc. It's sitting here waiting to go to the bank. And I'll make I'll click it. There might have been a whole list. There might be checks that people told me, they gave me the check, so I received the payments, but they told me hold it. So I'm not going to deposit it yet. I'm going to hold those checks. And I press OK. And I save and I close. See, it's coming from undeposited funds. Someone once asked undeposited funds. When I receive money on invoices, but it's not yet in the bank, it's in a holding account called undeposited funds. And when I have to actually go to the bank and make a deposit, whether it's a mobile deposit on your phone, whether you're going to the teller, once you make the deposit, then you could actually make the deposit in QuickBooks. Don't deposit in QuickBooks before you do it in the bank. You might think you have too much money and you'll bounce checks, you write out checks. You want to have the balance of QuickBooks the same as you have in the bank. Okay, thank you for clarification. Net income does not include liability. Liability is separate, that's liability. Again, you have the assets is on one side and the other side is liabilities on owner's equity. If liability is zero, then then assets equals owner's equity. If everything you did to fund the company was borrowed, then assets will equal liabilities and the zero owner's equity. When you bill a customer, it doesn't mean he paid. That is correct. You bill them, it's an invoice. And that is the whole reason why you have accrual on cash, etc. Someone asked about earlier, this will pertain to shipment open balance on 200 May 1, and you want to add your paper invoices of earlier dates. So that is effective. Okay, now I understand the question. Well, it's possible that I had a bunch of scraps of paper. I didn't have real invoices that sent to the customer. We could test it out. I think that it will still increase his, if you make him a new invoice back to April, it would still show that he owes it. Someone asks, where did I open this? Please spend a bit more time on owner's equity. We're going to do owner's equity next time in conjunction with actually creating more services. We got in with a donation and with selling chamashim, but we're going to build some services because we're a consulting business and we want to have, we started last time, we had Tech 1, Tech 2, but I did that in my 2019 software. So now I recreated the 2020 to match everyone. And we're going to have emergency rates. We're going to have, you can have different price out different things. Why is the net income not subtracting the liability on the bank statement? The bank statement doesn't have a liability. So please clarify that question. Stripe is credit cards. Maybe by the end of next class or on Monday next week, we'll be able to get over to the credit cards is another method of receiving payment. When you receive payments, they'll give you the option to receive a cash, to receive a check. Maybe someone paid, Zelly, Cash App you, what's it called, Quick Pay you, and Chase, it went straight into your account. So then you would just, in the received payment section, it would show an option of transfer that went into your account. And likewise, you could probably have received payment by credit card. So isn't there a liability for $250? The liability is not owed by the bank. The bank doesn't own anyone. You deposit $500 in Chase. It's yours. The person has no right to go to your bank and take out money. The bank doesn't owe anything. The company owes it. That's a liability. And I showed that on the balance sheet. If I go one more time to window, we have maybe 10 questions left. I'm going to try to speed through the important ones. I go to the, we lost some time with that share screen. I go back to a balance sheet. Banking, use register. Actually, where I'm going. Again, reports, company, balance sheet. I'll show it again until you understand. Reports take time to understand. There's a lot of numbers jumping around. But we have the total assets of 620. Right over here, loan payable, that is liability. Look at the header, current liabilities. Current liabilities is loan payable. It's sitting there. We could wish our debts away, but they're not going to go away. So if after we have 920, we pay off our liability of 250, we still have 670 left as owner's equity. That's the line, total equity. What remains after we pay our liabilities? Again, what is owner's equity? The balance that the owner could get from the company after satisfying his liabilities. You can think about it, if you had stocks and the owner's equity was stocks and the stocks were devaluated, your owner's equity could theoretically go down in other ways, but that's beyond this class. Again, I was, and so live clarification, the invoice. We do an invoice, someone asked. Okay, I think this is a question from earlier now. Let me see the most current question, answer live. Page to create an invoice. When was that question? I think we already answered all. Why didn't an invoice with $200 get an invoice number? It's because I never really invoiced him. I have to create, what happened was that I took, invoices is that he gets an item and I hand him the invoice and there's a number. It could be, if I shipped it out, you have a packing slip with the invoice inside, or you email the invoice. In this case, I created an invoice and you could go back and make a number for it, you could do, but that's the reason why it wasn't there in the first place. I believe now, someone has to share recording. It might not have been the beginning, but sometime it was. If I send Stripe, the same thing as either credit card or automatic processing. We'll see that when we have other methods of payments. Okay, I think we answered all the questions just over here. Is linking bank account to QBD. QuickBooks Direct, I guess. Yeah, there is a way. My next was how to download transactions. If someone wants to volunteer, we could download his file. Deleting a company, you could delete a company. It's another file like anything. You could delete companies. Hopefully, only deleting a practice company. No one wants to delete their whole company with many transactions. I believe I did this as well. There's 2 questions open. How do I set up a company on my software to do examples? Set up a separate company, go to File, the top menu, File, the drop-down menu, you go New Company. Again, File, New Company. One feature that accountant's version has that the other versions don't have, you can have 2 companies open at the same time. You can open a second company or you take a new company. The regular versions do not have second companies, but accountants many times have to go back and forth, and it's a feature which you're getting to understand how to use this in the share. That's that. I think it's only $100 payment for the loan to the principal. It will be if you paid your loan, it will be a journal entry. I think we discussed it. I'm not going to do it now, but we can do it next time. It will be debit the liability, because you're reducing liability, and you would credit the bank. You're crediting the cash. That's how it would be. If it was principal and interest, so you would take out more. You would have interest expense also. You would pay $110, and it will be a compound entry. It will be debit the liability of 100. Debit $10 of interest expense, because expenses are liabilities. I know this answer, I'm going a little faster, so ask this again next time. So the two debits will be $100 of the liability, a $10 of the expense, and I'll credit the bank $110 for the total. I believe that answered all the questions for today. And thank you very much for joining, and hopefully we'll see you again on Wednesday, Mitzvah Hashem, without the technical issues. Let me see over here. I'll stop sharing screen share over here. And I see over here, there was a Q&A in the chat. Again, I'm focusing on the Q&A. People had questions in the chat, they could have moved it over. And obviously practice, experience comes with practicing, just like, it's a new item, we're driving a car, driving a bicycle. Sometimes you fall off. I'm sure the time is that someone will make a mistake, you realize it, and you go back and do it. No problem. Okay. Okay. We obviously welcome feedback. You can send it. You can send it to me. You can send it to Wordy, wherever you feel more comfortable sending feedback to. And in general, try to keep the questions on topic. I know some people already have companies, the businesses doing things. Try to keep the companies on topic. Sometimes it's tempted to give a quick answer, but where it's a large class and there are many beginners and they get lost. So we're going to try to stay on topic with the questions and defer off-topic questions to the end of the class. I'm not sure when we get to those things. Someone wants to know, do they have to enter everything I did now? You could, theoretically, you could just say this all as I could give you a sheet with the transactions we did, or this could be a practice file and we could open up next time with a new service company. So it's really up to you. I'm gonna, for those that want to just practice what we did today to see we came with the numbers of net income and balance sheets, I'll put together the 10 transactions or so that we did today. And we'll see that we might continue on this file, we might open a different file. Okay, that was the answer. Someone asked about you work with two companies, you can definitely have, each company file will be another file. QuickBooks is a software. Think about it, a Word document. You can make many, many files. So by default, you go back into the file you had, but you could create tens of files, no problem, 100 files. You can open one at a time or an accountant's version, 2 at a time. So no one should have that issue, be worried. That is actually one of the benefits of the software, that you can have as many files as you want for one purchase as opposed to subscription services. Okay, thank you very much for joining. I believe that it's for today.